An incredible financial shift is happening right before our eyes, but so many people are so caught up in what's happening in the next 5 minutes or tomorrow, they can't actually see the big picture of how much money, how many investors. It's insane what is about to happen to the cryptocurrency markets. If you can stay in these markets for the next few years, your chances of creating truly life-changing wealth are very, very high. If you can stop thinking about how do I get rich quick, what scam token can I throw some money in today that'll give me 1,000x overnight? Most people lose most of their money doing that. Sure, some people do get lucky gambling, but most people don't. But if you understand the big picture and you can actually just relax as an investor and buy those fundamentally strong coins, dollar cost average in to the good stuff, be patient with those strong coins, you're probably going to do very, very well, because what's coming is insane. And in this video, I'm going to break down the numbers that you need to know as a cryptocurrency investor that should make you mega, mega bullish on crypto for the coming years. My name's Lark. Every day I talk about cryptocurrency investing, so if that's a topic that you would like to learn some more about, make sure you are a subscriber to the Lark Davis channel, that you are gently tapping on the thumbs up button for the YouTube algorithm. It only takes a quick moment, just a quick tap, and of course, click on the notification bell to know when I put out a new video. So let's go ahead and get straight into this topic. And let's start off with this. This is a recent survey by Fidelity, one of the world's biggest and most important and influential asset managers. According to their survey, they said that 90% of institutions plan to have exposure to cryptocurrencies by 2026. Think about that. People are out there panic selling 5-10% drops. And these guys are saying that institutions, 90% of institutions plan to have exposure to crypto by 2026. This is mind-boggling stuff. Now, who are institutions, right? Well, it's a big group. There's a lot of different financial organizations that we can put under this very broad stroke of financial institutions. Here's just a few of them, though. Far from an exhaustive list. We could go on and on and on. I didn't, for example, include insurance funds or private funds. It's a lot more we could talk about, but just to give you some perspective on how big institutions are in terms of the money they control: hedge funds, $4 trillion, sovereign wealth funds, $5 trillion. In case you're not aware what a sovereign wealth fund is, that is essentially the investment arm of a country. So like Singapore, which invests in Bitcoin, by the way, Singapore's sovereign wealth fund, they have about $1 trillion that they invest in different stuff to make more money for the country. Central banks, they're sitting on around $9 trillion in cash. Asset managers, that's your BlackRock, that's your Fidelity, and other big managers like that. $34 trillion. So just between these four different groups, we're talking about $50 trillion. 52 trillion, actually. That's a lot of money. Come on. That's crazy. And we didn't even account for everyone here. There's a lot more groups with a lot more trillions that we could be talking about here. If even a fraction of that money comes into the cryptocurrency markets, it's huge. It's huge. Imagine just 1%. That's $500 billion. That's just a little less than the current market cap of Bitcoin. Come on. That is big, big money out there waiting to get in. So that's just on the institutional front. By the way, if you want to earn some passive income on your Bitcoin, you should check out Celsius. They currently have one of the most competitive rates for earning on your Bitcoin, 6.2% on your first Bitcoin. And if you use the link down below in the description to start earning some passive income over on Celsius, you'll also get a $40 sign-up bonus after depositing more than $400 worth of crypto. So go ahead and check that out using the link in the description. Now, when we start to look farther down here and start to understand all the little pieces that are coming together, the appetite for cryptocurrency investing is rising all of the time. For example, Andreessen Horowitz, or A16Z. They recently raised $2.2 billion during the market slump. Market was tanking. They raised $2.2 billion for a crypto fund. Obviously, because all those people who put that $2.2 billion in believe the crypto is going to zero, right? All these smart funds and firms and investors, they know what's going on. They see the big picture that your average retail investor is completely freaking missing. These guys are bullish, and the people who are backing them obviously bullish as well. We also saw Grayscale bringing out a DeFi fund recently. So that's giving investors a wide exposure to different decentralized finance assets. But what's really interesting is that both Aave and Compound have actually launched services for institutions. So these key decentralized finance platforms are starting to tap into the trillions sitting in the hands of institutions. Obviously, these guys want a piece of that hot, tasty DeFi pie and the sweet, sweet yields that are happening. And let's just give you some perspective here by talking about bonds. Everybody loves bonds, don't they? Globally, the bond markets are worth $119 trillion. It's an unimaginable, an unbelievable amount of money in the bond markets. Now, the US bonds, 1.2%. That kind of sucks. UK sucks even more, 0.6%. Hey, you want to talk about Sucktown? Let's go down to Japanese bonds, 0.016%. Come on, man, that's ridiculous. And when we go right down into the toilet, we start talking about European bonds. French bonds, 0.04% negative. Negative. You lose money by keeping money in a bank in France. Not a lot of money. Not a lot of money right now, but you're still losing. Germany, taking just a little bit more, minus 0.39%. Again, negative rates. So if you have, $1 million in the bank, that's an annoying enough amount of money coming out of your bank every year instead of earning anything on interest. And of course, we're not even counting for inflation here, right? So you're not only losing money with negative interest, they're literally taking it out of your bank account, but then you have inflation, which is also destroying the purchasing power of the money that is left in your bank after they steal some from you. And then, of course, it's taxes and all that fun stuff. Governments, man. Meanwhile, over in decentralized finance land, Aave is currently giving you 4 to 5% on dollars. And look, I know, we're talking about very different things here. I'm just giving you this for reference. The risk factors of getting on something like Aave are not the same risk factors on getting into the bond market. I fully understand that. I'm giving this to you as a point of reference to say that there's an incredible amount of money out there earning virtually nothing, whereas decentralized finance has some pretty damn good and interesting and highly competitive yields. And look, 4 to 5% on Aave, that's low. It's super low. You can get much higher rates on a lot of different platforms. The centralized lenders like Celsius, like BlockFi, they offer much higher rates when it comes to stablecoin lending. If you start playing around in some of the higher risk DeFi, which look, the $119 trillion in the bond market, that's not going to come into high risk DeFi stuff. They might come into low risk DeFi stuff though. And that's where the interesting opportunity is for a lot of these different players. But there's a lot of money out there earning nothing or earning negative that is looking for a home, and decentralized finance and crypto can offer that for them. Then we have corporations, and yeah, we had a story the other day, Tesla's considering accepting Bitcoin again in exchange for cars. Another 180 by Elon Musk and Tesla. But the real news is, not just the social proofing, which is nice. It's nice that if Tesla does start accepting Bitcoin again, because it makes other companies feel good about it and like they're not going to be judged as harshly, et cetera, et cetera. But the real news is that Elon said one of the reasons that they are investing in Bitcoin is that they see the low rates, the inflation, and of course the negative rates in Europe. He said Tesla's European division is facing negative rates in their bank accounts, which is crazy. Think about that. So as a result, they're looking at Bitcoin as a way to get away from holding on to cash in a bank account, which is just a bad idea for many, many reasons. Now, internationally, publicly traded companies are sitting on 10 trillion freaking dollars in cash money. That is being inflated into oblivion. 2020 was a record year for inflation for the world's biggest, strongest currencies. The dollar, the euro, the yuan, all saw massive inflation last year. Then we have the low rates, and it's a mess. It's a mess for these companies sitting on literally trillions of dollars in cash. And then we have companies like Tesla out here social proofing that buying Bitcoin, holding Bitcoin as a hedge away from cash, it's cool, it's normal, it's nothing weird about it. I think we're going to continue to see companies coming in over time. Tesla, MicroStrategy, a couple of the other companies that have got in, they're not going to be the only ones. We're going to see a lot more companies getting in to Bitcoin. Then we have family offices. This was a quite interesting one as well. So family offices starting to take crypto more and more seriously. So this is a Goldman Sachs survey. They said that 15% of family offices already invest in cryptocurrencies, and this report shows that a further 45% of family offices plan to invest in crypto moving forward. Now this, we're talking about, again, incredible sums of money here. So let's just break it down. The rich people of the world, right? There's 56.1 million millionaires. Now, if you think about that, there's not even enough Bitcoin for each one of these millionaires to have a third of a Bitcoin, assuming, of course, equal distribution, which is not going to happen, right? So from that perspective, Bitcoin is already a scarce asset where all the world's millionaires literally can't own one of them. So if you can get one, you are ahead of the game. But your average person with $1 or $2 million, they cannot afford a family office, right? A whole room full of people managing their investments for them. So there are 663,500 people in the world who have $30 million or more. But we usually don't talk about family offices until you get up to the $100 million range. So there's around 30,000 people with $100 million or more globally. Now, at a bare minimum, these 30,000 people control $3 trillion in wealth. That would assume that those 30,000 people only have $100 million. Many of them, of course, have more. If we look at just the world's billionaires, 2,755 billionaires in the world, they control $13.1 trillion in wealth between them. Even 1% of the money from the millionaires and the people with 30 million and the people with 100 million and the people with $1 billion plus coming into crypto is dramatic. And if we assume that this is going to be an asset that is as common as owning stocks or bonds or any of the other stuff, we're going to see allocations beyond 1%. We're going to see people with 4, 5, 10% allocations into Bitcoin, into Ethereum, and other prime assets in this market. A lot of money out there sitting on the sidelines waiting to come in. In this video, I've talked about literally probably around $200 trillion worth of wealth between the bond markets and the corporations and the millionaires and the billionaires and the hedge funds and the asset managers and all this stuff. That money, all combined, has just a fraction of a percent of exposure to the cryptocurrency markets right now. And yet they all intend to get in much more heavily. Family offices are coming in, more institutions are coming in, more corporations are coming in. And some people are bearish on crypto. And look, it's okay if you're a trader, you're playing the short-term play, say, hey, look, we're, short-term bearish. But And look, I talk about the technicals on the channel, how look, oh yeah, there's some bearish indicators and we're in a bear trend and all that stuff. But when I look at the market, when I understand the numbers, the big picture, what's actually going on here, I'm mega bullish. I'm mega bullish. I am a perma bull on the markets, and some say that's a weakness, but I look at the big picture. I try to understand what I'm looking at as an investor, not as a day gambler. And being an investor in crypto has already made life-changing wealth for me and my family. I'm sure it will do the same for you and your family if you can act as an investor and stop acting as a gambler. Anyway, those, of course, are just my 2 Satoshis. Your question for today: what do you think about my thesis? Do you think that we're going to see some of this money from all these different institutional players piling into the cryptocurrency markets? Or are they just going to keep buying bonds? Buy bonds. Bonds. Let me know down below in the comments section. Thanks so much for watching today's video, and peace out till next time.